Okay, so in this lecture, we're going to do a quick lecture talking about hard money and private money lending. So typically, most of the people that I work with or I talk to that are trying to learn how to start investing in real estate, when they think of hard money lending and private money lending, they're thinking about how they can take advantage of hard money lenders or private money lenders. But you might not also consider the fact that once you start becoming successful with investing in real estate or becoming an entrepreneur and you've got some money saved up, significant amounts of money saved up, that you potentially could start making money by becoming a hard money lender or a private money lender. So, yes, like I said, most of the people that are probably taking this course, that's not what they're taking the course for. But I don't want you to forget that once you become successful and you make a lot of money, that you can be on the other side of the table. Like, so for me personally, I'm at the point now where I'm pretty busy with what I do. I have three different businesses. I got the real estate business, I got HBCUconnect.com social network, and I do a lot of recruitment events and activities for companies. I've got a software company, and all of that keeps me very busy. But I'm very busy making money the whole time, and I'm saving that money. I'm investing in real estate, but I don't always have the time to be looking for new properties and new projects in real estate. However, if I have money saved up, and I'm hoping that you guys get to this point as well, that you can actually consider things like making money in real estate doing private money lending. So, what is hard money or private money lending? This is when you, as an individual investor, lend out your money to another real estate investor for a specific time period and for a specific desired return on investment. So, that's right, you can basically say, I'm willing to lend you this amount of money, but over this time period, these are my expectations on how much money you have to return back to me, or else I will take the property. You know what I'm saying? So your loan or your lending should be insured or secured. I'm sorry, secured by that property if you are doing it like as a hard money lender or even a private money lender. You might want to have your name on the transaction or the title to secure your funds. But here are some of the key points to becoming a hard money or private money lender. The money that you lend out should be secured by the property itself. Now, not all private money lenders do this. Usually, hard money lenders they do this. So that means just like as if you went out and got a mortgage, that mortgage is secured by the property because that mortgaging bank has a lien on the property. So that means nobody can sell it or do anything with it without paying back the bank's interest. Or if that something happens to the owner, then that property falls back to those that have the lien on the property, which could be the bank, right? So if you lend out money, you should secure that money with the property. All right. So that's the key point number one. Number two, you must know how to evaluate real estate deals. So basically, if someone comes to you with a deal and asks you to lend them money, or even if you find someone who's looking at doing a deal and you offer to lend them money, you yourself should know whether or not that is a good, sound investment or not. So basically, if somebody says, "Yeah, I want to buy this property," you should be asking them how much is the property going to cost initially? What are you getting the property for? Uh, you should want to know how much work has to be done on it and how much is that work going to cost. And then after that work is done, how much are you going to be able to sell it for? And then also based on those numbers, especially that purchase price number, you want to know roughly, or you're going to want to know, like for example, what the taxes are on that particular house, what the utilities might be while going through the rehab, and then depending on your due diligence, you may want to see the property yourself to make sure that their numbers and everything look good to get the job done. All right. And so this is something that I would say is pretty risky if you don't know what you're doing to just lend somebody a lot of money to buy a property, especially if the person you're lending to does not know what they're doing, or you don't know them very well, or you don't know how to do your numbers to know, okay, worst case scenario, I get this property and then you have to make your money off the property because whoever you lend it to failed. Okay, so there could be some risk involved in this. However, people are doing this and people are making money doing this. So I had to present this to you as a way for future thinking, a way for you to make money investing in real estate. Okay, now you should have more than enough money. This is point number 3. You should have more than enough money to cover the hard money loan and any rehab expenses necessary to complete the project, just in case it falls back to you to complete. All right, so you can get your money's worth out of that investment. Now, number 4, you must also evaluate the borrower's ability to pay you back. So you might not do a credit, check like a bank would do, but you should definitely do your due diligence just like a bank would do to understand who you're lending to and their ability to pay you back. Now, some of the pros with being a hard money or private money lender can be a great return on investment if done right, especially as compared to putting your money in the bank and letting it sit there. Also, it can be hands off. So if you get an experienced team of flippers, let's say they've done 10s to 20s of projects, right? And they just need money because they keep finding deals and they can execute those deals, but they just need more money to go into the machine. It could be a very sound investment, all right? And then it could be hands off. You just write a check for whatever amount, they handle it, then 3 months later or 6 months later, you get your money back with your return and you're good. So that could be hands off, great return on investment. But some of the cons can be risky, complicated with the wrong deal. Risky and complicated with the wrong deal. So if you don't know what you're doing as far as being able to evaluate a deal and be comfortable with those numbers, or having to take over a deal and being comfortable with that, it can be very, very risky. So this is not for beginners, but it is something to consider in the future as you get more experience investing in real estate. So that's all I have for this lecture. Just wanted to go over hard money lending and private money lending, not as a way to get funding, but as a way for you to make money in the future. All right. So wake up. We got a lot more to learn. See you guys in the next lecture.